Good evening, I'm Dan Fitzpatrick and it's Thursday, April 18th. And in this free video, I want to look at the financial sector real quick. Morgan Stanley, they announced earnings this morning and they beat on the top line, meaning revenue, and the bottom line, meaning their stated earnings. And what happened to the stock? It tanked more than 5%. Okay, this is a problem. You know, there are many reasons for that. Their fixed income business is declining and this and that. Duh. When there's like no income in the fixed income part, that's a problem. But look, if you just zoom out, look at the XLF. This looks kind of toppy to me. You still have higher high. We're just looking like we may be getting a lower low in the next couple days. But you can't really put a spike in this uptrend yet. But it is looking pretty toppy. So if we look at the other big brokers, Goldman Sachs has been leading this thing lower for a while. JP Morgan, the same thing. So when you got all of these, like the big three, trading in sync, that's a problem. Another one, Citigroup, this is looking a little toppy as well. The thing that you got to do on these trend lines is, you know, you can draw them up like this. And as soon as you get one that just does not come even anywhere close to tagging this trend line again, in other words, confirming it, that's a big problem. So you don't always have to wait for a break of support in order to get bearish on a stock. All you really need to do is watch and see for a break or a non-confirmation of resistance. That's what we're seeing here in Citigroup. I think that's a big tell, as well as, of course, this with Morgan Stanley, Goldman Sachs, JP Morgan. So the bottom line is, these are not stocks that you want to own right now. Bank of America, no thanks. Wells Fargo, no thanks. You just don't want to go there. Now, you have to differentiate between a long and a short-term portfolio. When I say, oh, you don't want to own these things, look, if you want to make money 5 or 10 years from now, you're going to make money on Bank of America. You're going to make money on some of these others because the general trend is up. And you can't trade your entire net worth. Sorry, you just can't do it. You have to have some commitment to a long term. But what I'm talking about here today, and just in general in my videos, unless I'm talking about, and I do this on a fairly frequent basis in Stock Market Mentor, the yield hog portfolio, and that is these high yielding stocks that are intended to be held for years through thick and thin. We don't really care so much about the capital gains or losses. We like the gains, we don't like the losses. But what we care about is the money machine aspect. Are they still spitting out monthly, sometimes, but typically quarterly dividends? And if they are, then let the price take care of itself. I just want the money that I get for owning the stock. That's a different thing. That's more of a long-term perspective. But from a trading perspective, these stocks all look like they're ready to go lower. So I want you to avoid those. Now, members, get over to the strategy session. I've got some things to say about some of the earnings numbers today, but also I want to talk about some natural gas plays, because that sector finally, after years of decline, seems like maybe it's turning a corner, so I want to check those out.